A caller on the line. We have Julie. How are you doing tonight, Julie? Thanks so much for calling.
Thank you. Great show.
Thank you very much. And thank you so much for holding. What's your question for the panel?
Well, my husband and I purchased a home, a detached home in East York, Toronto, Danforth area 5.5 years ago. We paid $350, and based on comparables, we're pretty sure our home value has gone up to approximately $600K.
Yes.
So I'm wondering, this is a lot. It's a huge appreciation, and I wonder, is this a sign of a bubble, or historically, what type of home value appreciations do you see in Toronto?
Don, I'll let you maybe take this, and Jazz, you want to take it right after. So, Don, I know you're an expert in the Danforth area. What's your thoughts on what Julie has to say?
I think that Julie and her husband have to figure out that that they've bought a property in a good transition area, and the market demand has pushed that value up. Now they still need a place to live. So I didn't hear that. Julie, are you still on the line?
Yep.
Are you thinking? Am I comfortable with selling? Should I sell it and cash out, or should I? What's the real question?
No, we want to stay, but I mean, it's great. We're wishing that we hadn't put any money into our RSPs. We should have just purchased another house when we did.
Yeah, welcome to the world of Canada. Yes.
Yeah. So I guess my other question is, if we want to purchase an investment property, is it better to purchase a home or a condo? And is this type of appreciation a blip, or historically do you see this kind of, rise in value in such a short time?
You know what?
The GTA.
That's some good questions. Brian, did you have to say something?
You know what? I want if we could all just say one quick point, because I think all of us can maybe answer this question. So, Don, what's your points on what Julie should do?
Julie, you need a place to live. Keep the house. You love it. You love the neighborhood. Find a way in which to be okay if the value goes up or down, because you need a place to live. You might be able to now find a way in which to buy a property in an up-and-coming region like you just did. Find the next up-and-coming region, which Brian can tell you many hot neighborhoods, and then that's where you want to buy. But the decision is not whether it's ground-oriented or condo. It's whether it cash flows or not. Never buy a property that doesn't cash flow, because it'll kill you.
Excellent point. And Jazz, should she invest, or should she sell, or is the prices gone up too high?
Well, I would never say anyone to sell their principal residence. Like to Don's point, she has to live there. But your property's definitely overperformed what the average is. But to Don's point, but the situation is that it's very specific to neighborhood. So I would say, find an investment property that cash flows, similar to what Don said.
Excellent point. Ben?
Yeah, I agree 100% with Don, actually. I think that's great advice. Even though I'm not particularly bullish on Toronto real estate, I don't suggest that anyone with a principal residence sell their homes, provided they have substantial equity and have no plans on moving.
Yes.
So I think Don's advice is great, and I think in particular his advice to look for something that's cash flow positive is fantastic advice.
Ben Myers, should she buy a condo, or should she buy something else?
Well, I mean, I'm in the condo business, so I'm going to say condo. I know that low-rise homes have typically in the past appreciated at a higher rate, but in terms of hedging your risk, obviously, condominium apartments are typically lower priced and potentially easier to move in case they need to, in case you need to make a quick sale.
So they sell a lot quicker because there's more demand for them.
Exactly.
Excellent point. Thank you so much. Julie, I hope that answers your question. You have 4 people help you with it. Thank you very much for your call.
That was great. Thank you so much.
You're welcome. We're going to do it again with Maggie. How you doing tonight, Maggie? Hi, Maggie. Okay, we'll try Maggie again in a couple. Oh, Maggie hung up, and there's the dial tone. So let's do some more. Do you guys like this myth busting that we're doing?
Yeah.
Okay, so. What other myths are we seeing right now? I guess cost. What's really driving prices up in your opinion? I'll throw it all to the panel. Jazz, what's driving prices right now?
Well, I think a couple of things. I mean, there's lots of different studies on what interest rates, what the actual relevance is, and there's as many studies there are that say that interest rates are relevant.
Yes.
There's others that say they're irrelevant. I just think it's more along line with demand and overall from a standpoint of where we are currently from a geographical perspective, and that ties into demand. We're in a region which is highly desirable. And I mean, overall, when you look at the actual migration into the GTA,
yes.
To Ben's point, overall, you have not only people coming in who are immigrants, you also have people who are from Brampton, Mississauga, Newmarket, people who are Canadians who want to move into the GTA. And that's obviously going to push values up. I think overall, when you compare Toronto to other world urban centers, not to say that Toronto's quite in the caliber of New York or London yet along that way, our price per square foot, whether it's condos or if it's single family homes, is far from that. So I think there is some upside with regard to that. And over the years, you'll see slow, steady demand overall that's going to increase the pricing overall.
Okay, and Ben, I'm going to actually break this up into two parts for you. First of all, do you see prices continuing to go up? And if so, why or why not?
Well, actually, I wouldn't mind answering the first question that Jazz was answering first. When it comes to population, I think absolutely Toronto, you're going to have sustained population growth here, probably in the 2 to 3% range. The problem is to look at just demand ignores one of the major variables in economics, which is supply. Right? And so we know that if supply is less than demand, yeah, you're absolutely going to have house prices that would rise above what you'd expect given inflation or wages and so on. So if we look at the supply side, if you go back at any point in the last decade, and if you look at housing starts per 10,000 people here in Toronto, it's a graph I actually just posted on my website just a couple days ago.
Yes.
We're actually well above the average for all of Canada here in Toronto. So there's a great deal of supply that's meeting the demand. You know, if you look in the condo market in particular, they were talking about, there's a report just this week that we're looking at 25,000 housing starts in the condo market, and demographic demand would imply somewhere around 15,000. Right? So I don't think there's any shortage of supply right now. Yes, the demand's going to be there, but I don't think that's what's been the major driver. Certainly it's driven some of the price growth, absolutely, but I think the major driver, do I have time to answer that?
Yes, you have 20 seconds.
Okay, debt. I think that if we look at the start of the decade, you have two major events that happened. You had CMHC drop their down payment requirement.
Yes.
I mean, all you have to do is think about it's $5,000 to $10,000 and it's 10% minimum. I qualify for a $90,000 mortgage. If it's a 5% minimum with the same $10,000, all of a sudden I've got $190,000.
So it's a lot of debt. We got to go to break with that. Yes. You are watching Inside Toronto Real Estate on Rogers TV. You think prices are too high in the city? Give us a call, 416-446-7090. We have a few lines open. We'll be right back. Welcome back to Inside Toronto Real Estate. I'm your host, Brian Persona. Tonight's show, we are asking the question, is Toronto in a housing bubble? With us tonight is Jas Grewal. He's an advisor with the Callum Ross team, the #1 mortgage brokerage in the country. We have Ben Rabideau. He's a real estate blogger, also an instructor at Georgian College. We have also on the line Ben Myers, the Senior Vice President of Urbanation, which tracks the high-rise market in Toronto, and Don Campbell, President of the Real Estate Investment Network based in Vancouver. So if you have comments, give us a call, 416-446-7090. Okay, so we're in the last segment. We're just going to mow through things, but there's actually two questions I want to ask. Number one, Ben Myers, I actually want you to respond to Ben Rabideau's comment about the amount of housing that we produce per capita, that we're actually over the fundamentals. Ben, what's your thoughts on that?
I mean, I can only speak to the Toronto market. You know, like I said, we're getting in the neighborhood of 100,000 new people into the Toronto CMA every year, right? So if we're only producing in the neighborhood of 15,000 condominiums and 10 to 15,000 low-rise homes, then we're certainly undersupplied, in my opinion, right? Mm-hmm. So based on the level of persons per household, so I think we're in a good spot. I think you know, I think I'm pronouncing the name wrong. Jeff said, you know, Toronto is a world-class city, and people want to live in downtown Toronto. So yes. I think that you know, I don't think that we are oversupplied in any means.
And I guess there's also churn. People want maybe a newer house to get out of an older house, so there's that aspect of it as well. So we'll leave it at that. Don Campbell, what's your last words on whether or not Toronto's in a bubble? And you know what? Maybe I have a question for you, Don. If foreign investment is not driving Vancouver, what exactly is, and why is it so far above and beyond the fundamentals?
Isn't that an interesting analysis? And that's what we're in the midst of doing. We're going to really diving into the details. Foreign investing is driving a portion of the market. That is, there's no question about it. The high end, we're up 39% on $3 million properties. The sales are really ramping up there. We're also seeing them driving the brand new condo market, as we're seeing a little bit in Toronto. But fundamentally, we're surrounded by water, mountains, and the ALR, which is the Agricultural Land Reserve here, which is your green belt. And the population is growing. I think that what we're finding is the transportation is driving it, and I think we need to really ignore the average prices. I don't want to keep harping on that. I think we have to look at neighborhood to neighborhood, what's really happening.
Yeah. Excellent point. And Jas, final words from you?
Yeah, I tend to agree with what Don has to say there with regard to overall. Overall with Canada, I think we have a lot of stuff the world wants, and I tend to agree with Don on that. We're going to attract people with higher net worth because of that. As John said, we have a lot of the head offices, et cetera, that are going to service those sectors here. And that's going to increase prices to a healthy level. I don't think there's any issue with that from my perspective. But also the key thing is this: if you're looking at investing in Toronto, you've got to focus on neighborhoods. It's not overall anywhere in Toronto.
And Ben, we're going to give you the final word of the final episode of this season of Inside Toronto Real Estate. What's your thoughts on whether or not we're in a bubble?
Well, whether or not we're in a bubble comes down to semantics in terms of how you want to define it. I think if we were to boil it down, we're substantially above fundamentals. Yes. And I think from this point looking forward, I personally would see as a best case scenario, you're looking at a decade of stagnant real house price appreciation. And I think that's the best case scenario, and I think that's far from assured. I think if you look at all the fundamentals that were measured here, or that were discussed here tonight, population growth and so on, I've examined all of those on my website actually, and all of them come up significantly short when it comes to actually explaining house price appreciation. By far, the best correlation is mortgage debt to GDP. Yes. Right. So as people are taking on more mortgage debt, based on their incomes or the economy, it's absolutely driving house prices, and that's not sustainable. Right, so that's my final word for you there.
Thank you very much. Jas, thank you very much. Thank you. Ben, thank you very much.
Pleasure.
Ben Myers, thanks so much for being on the line. And Don Campbell, thank you so much for being on the line. So if you want more info on mortgages, contact Jas. If you want to know whether or not Toronto's in a bubble, look at Ben Rabideau's blog. If you want more info on the condo market, give Ben Myers a call. And if you want to learn how to invest in real estate, give Don Campbell a call at the Real Estate Investment Network. And that's all the time we have for tonight. Be sure to check out the Inside Toronto Real Estate page tomorrow to get access to video on the show. And this is the final episode for the season of Inside Toronto Real Estate. And folks, have a great summer. Thanks for watching. And remember, keep your eyes open when you're closing the deal. Bye for now. Thank you very much.